Hey, friend, welcome back. As always, I'm your host, Brian Davis, co founder of Spark Rental, and I am on a journey to reach financial independence with a group of other investors in our co-investing club. We go in on deals together every month. We vet them together. I invest my personal money every month. This is my real estate investing strategy, and it's a lot of fun. And as part of our investment club, we are constantly bringing in outside experts to come and speak and present. And we try to do the same thing on our podcast as well. And today we've brought in guest expert Jonathan Greene. He's the host of the Zen and the Art of Real Estate Investing podcast. He's a certified life coach and real estate coach, and he's the real estate investor and founder behind Streamlined Properties. And Jonathan is going to talk to us today about how off-market property acquisition works and some of the tips for buying properties that are not listed on the market. So, on that note, Jonathan, welcome and take it away.
Brian, thanks so much for having me. Appreciate having the opportunity with your audience. So, what I've learned in well more than 30 years in off-market acquisition is that most people are doing it all wrong. The general message that most people are taught to send out when they're trying to do acquisition on their own is, I will buy your house quick for cash. It's what started on bandit signs. It's what everybody does. It's actually what most people do even when they don't have money. So that's the first trouble spot. If you're saying you can buy for cash, you need to be able to buy for cash. But what the real problem is, that's the dialogue that's sent out in mass. So people are just taking a master list and sending the same thing to everybody. But if you really boil it down and figure out who's the recipient of that, that message is very, very rarely the target for that seller. A very old person who's lived in the house for 50 years and bought it for 20,000 and it's worth 400, they don't need a quick sale for cash. They might not know where they're going. So everybody starts pushing the wrong buttons and then can't get back to it. Someone who's going through a divorce, definitely not quick for cash, long process. Somebody who is an heir, there's usually 2, 3 heirs. They never agree. So your pitch is, and I can get this done quick for cash. So what people are getting wrong is they're not making a connection with the seller because they're being taught that this is, hey, that's the way that's going to get a call back, but then they don't know what to do. I would estimate that maybe about 10% of people need quick for cash. And a lot of that is in the pre-foreclosure foreclosure space, but they're even getting that wrong because what all of the scripts and what the classes and these people will teach people is when you go in on a foreclosure, everyone starts by calling them and telling them they're in foreclosure. And if you really want to upset someone, just tell them how they can't provide for their family, open up the call like that, and you're never going to get anywhere. So it's really built upon dialogues and like a lack of connection where I think all of this has gone wrong.
It's funny you brought up the pre-foreclosures, and as you were talking about how a lot of the people who are potential sellers and leads for off-market deals, how most of them are not distressed sellers. Even so, I cut my teeth in real estate, actually buying pre-foreclosures and distressed homes, and even then, the quick, the buying your house super fast angle was actually not the angle that really worked. And it's not really what people wanted to hear. What most
Yeah.
people wanted to hear is, can you help me stay in my home? That's really what they wanted. There was a small minority who just wanted to get out quickly. But most of them actually wanted to stay in their home. So, they were open to like seller lease back, that sort of thing.
Yeah, well, that actually brings up the best point. The reason why none of these dialogues work is because each seller really just has a problem that they need solved. And if you go in as a problem solver, that's where you're going to win. But everybody's leading with something that they think is going to be getting a call, but then they can't back it up because they're using the same script. So like you're saying, pre-foreclosure, again, you may have to fix a problem. The people who are desperate are still not going to be wanting to know right away, hey, I know you can't pay your mortgage. You have to go at it from a sideways, like, hey, I'm an investor. I do research on all of these things. I pull this from the courthouse, from the courthouse and from the city county site. I just want to let you know they're always wrong. These lists are always wrong, but yours did come up with a previous list pendants. They're usually paid off. And then you go into the dialogue like that. If you compare that to, hey, you're in foreclosure, I want to buy your house for cash, it's not even close. You're trying to build a relationship and help solve a problem, and help solving the problem is everything about off-market acquisition.
Yeah, and one thing that you kind of hinted at there or touched on a little bit is just empathy in your communication with potential sellers, and not making them feel like they're boxed into a corner. Yeah, that is so important. Like you said, no one wants to feel like they're backed into a corner. As an owner in foreclosure, what they want to hear is, you've got options, right? And they want to hear that they're not being judged and that they feel understood, and they want that empathy. So anyway, I love all of that. Jonathan, in 30 seconds or less, how do you help people, and how can listeners connect with you?
Well, I just like you, I love having a podcast. My podcast is there, The Mindful Approach to Real Estate Investing. So I help a lot of people that way as a real estate advisor. I also run an on-market business, Streamlined Properties, and we work with hundreds of investors on off-market acquisition, landlording, all of those things in the state of New Jersey and New York. And I have contacts everywhere.
Jonathan, thank you so much for coming on the show. And guys, if you enjoy these conversations that we have, these quick hit conversations that get right to the point, please rate, review the show. It makes a world of difference to us. And we will catch you same place, same time next time. If that makes any sense at all, which it probably doesn't. But bye for now. Wondering how private equity real estate investing works? We get it. A lot of investors are put off by phrases like private equity or real estate syndication, but these completely passive investments are actually a lot easier than buying properties directly, buying properties yourself in your own name. So we offer a free 40-minute class called Hack the Rich, 7 Secrets We've Learned from Private Equity Real Estate. There's not even a sales pitch at the end. We'll show you how to invest in these on your own without any help from us. So go to sparkrental.com/hack to take the free class. And we can't wait to chat about your questions.